Hi, Paul here from Gary Moore and Me channel. Just thought I'd jump on here. It's a slight move from my usual kind of content, um, but I just thought I'd drop this little, I suppose, nugget of information on while I was here. It was just around gap insurance for motor vehicles when buying a car. Some people may not or may know what this is, but the only reason it came to my attention was I was helping my father a couple of days ago, and he was buying a brand new car. Very good, very transparent transaction, very easy. And inevitably, it came to the point where the dealer will offer various different perks along with the purchase of the vehicle. They'll offer mats, they'll offer Dime Bright, I think it was in this instance, or Diamond Bright paint protection, and obviously road fund license. They were all in there. I mean, I suppose take what you will from what you get offered. One thing that I'm never a big potential fan of is when they offer paint coatings. I always just think to myself, well, if they were that good, they'd probably send them from the factory with it. That's personal preference. I mean, some people might really want it, for other reasons. If they're in an area that cars get damaged from sap or, I suppose, bombardments from the sky. But the only reason I was going to come on here quickly was just to say that when we came to this point of the transaction, I noticed that the guy hadn't mentioned gap insurance, which when I've bought cars in the past, I've been offered gap insurance. So this was just a quick, I suppose, comment to just explain what that is in case someone doesn't know what that is. I'm sure a lot of you do. But simply what a dealer can offer, and I mentioned it to the dealer and my father took it, was they offer an insurance called Gap Return to Invoice Insurance. And what that means is that the car is covered in the event of it being written off for the difference between its current market value and the value when it rolled off the forecourt, whatever time frame that was from when the car was purchased. So hypothetically, you buy a brand new vehicle, £25,000, it rolls straight off the forecourt. Potentially it drops £3,000 in value. Could do, maybe less, maybe more, depends on what you've got. So you've been driving it around for 4 or 5 months. Whack, someone takes it out. The insurance company will go, yeah, it's fine, we'll pay it. But what they will do, they will only give you the value of the vehicle as it sits, as in the market value of that vehicle. So hypothetically, when the vehicle is gone off the forecourt, there's a drop in value. So say it was 25, it's now 22. It gets hit, the insurer turns around and says, I'll give you 22 grand to cover that damage. However, where the problem arises is if you've got finance on that vehicle and you finance £25,000, you're going to have a £3,000 shortfall, because it's unlikely you would have taken a chunk out of the balance at that point. You probably would have only paid the interest that the finance company are applying. So it was just, out of all the things you get offered when you're buying brand new vehicles, one thing I've always asked for, and I think is a genuinely good idea, is to buy Gap Return to Invoice. And it just means that in the event you were to have your car written off, say 6 months down the line after you've bought it, and there's a gap in value like say of £3,000, what would happen is the Gap would kick in and pay that £3,000. So you'd be able to, ideally, and I imagine you'd be able to then pay a larger chunk off your financial agreement. Likely you'd be able to clear the balance, because you would have put a deposit down, so there'll be a slightly reduced balance to pay. But it was just a quick one to say that Gap Return to Invoice Insurance is one thing that I would consider when buying a brand new vehicle. I'm not a financial advisor. I just thought I'd come on here because a lot of people would, maybe from my age and below, would probably be well aware of this insurance, but my father wasn't too au fait on it. He was a little unsure about it. He wasn't really sure what it was, but it was just a quick one really, just to say that in the event you're buying a brand new car, maybe speak to the dealership about buying gap return to invoice insurance. And the particular policy that my father bought, I think, covered him for 4 years. It was £495, and that's not bad considering that, you know, you'd rather be paying 495 when it rolls off the forecourt than having to find a £3,500 shortfall in the event it was written off, or and you had to settle your financial agreement. Or, you know, you want what you bought for your car. I mean, it'd be devastating to spend £25,000 on a brand new car, and then 3 months' time it gets written off, and you only get 20 for it. And you know you've shelled out 25. Wouldn't you much rather have that full whack come back to you that you've originally paid at the inception of the agreement? So it was just a thought. If there are any comments about it, or questions, I might be able to help, might not be, but it was just a thing really, just to say that when you're looking at brand new cars and so on, or even second-hand cars, depends on how much you're financing, I would just recommend maybe speaking to the dealer about gap return to invoice insurance. I don't know, might save you a few quid, could well do. But cheers, thanks a lot.